don't you hit that refinance button just yet. Here are 6 things that you need to know before making the big decisions about a home in Niceville or the rest of Okaloosa County in 2024. First thing you need to know is it's a seller's market, kind of. You've got a couple of opportunities right now to buy thanks to decision fatigue. Rates are down, but it might still not be worth refinancing right now. And housing prices have really jacked up the Niceville market. In particular, cash buyers are king right now, aren't always. And 6, I'll tell you when you can expect 3% interest rates to return. But first, I want to thank the sponsor of today's video, Cindy Zimmerman. Now you're going to hear a lot from Cindy today because she's really knowledgeable about our local market, and that makes her the perfect person to help you find or sell your home. For more information, check out cindyzsellshomes.com. Okay, so the first thing you need to know is that it's a seller's market. Kinda, sorta. Now, it's true that there aren't a lot of homes on the market right now, but some buyers continue to act finicky despite the shortage. Here's Cindy.
Compared to post-COVID, there are definitely more houses for sale, but we're still at less than what would be considered 2 months of inventory. And it takes 6 months of inventory to be considered a neutral market. Anything less means there are more buyers than there are sellers. So there's more demand than supply right now. So we have that low inventory. That has been keeping prices high. But like you mentioned, okay, so there's occasionally a house getting snapped up quickly. There's still houses getting multiple offers, but they're more the exception. The majority of the houses are taking longer to sell. And when we were in the couple of years post-COVID, things were selling for either at asking price or way over asking price.
That means you're going to see a split in the market between homes that are renovated and ready to sell and those that really just aren't. Which brings us to the next thing that you need to know, decision fatigue. Buyers and sellers can take advantage of the large amount of decision fatigue that's flooding the market here in Okaloosa County. So picture this. You are a member of a family who lives at Nellis Air Force Base in Las Vegas, Nevada. Y'all just got orders to move to Eglin Air Force Base across the country. You don't have time to fly back and forth on multiple 3-hour Allegiant flights to look at homes while you mentally prepare your kids to move, clean out your current house, say bye to friends and coworkers, and get the movers moving in the right direction, which, by the way, is east. That cuts out a lot of house hunting time. But the time you do have, you need to make sure that you have something that you, your spouse, and your kids can live in for the next 2 to 6 years. So no, you can't coordinate retiling the roof or putting in new carpets, anything like that. You got to get people moved in and fast. And that means that sellers have a huge advantage over other homes if they choose to update and renovate before they sell their house. They just need something that is relatively new, relatively clean, and fits the rest of their specs right now. On the other side of the coin, buyers who are willing to live with maybe like a chartreuse dining room or one fewer or one more bedroom than they actually need, or a very dead lawn for a couple of weeks or months, have a really great opportunity right now in Niceville to buy. Interest rates are high enough that many potential buyers aren't really looking right now, meaning more options for you with less demand for fixer-upper type homes. You can buy the house and date the interest rate, meaning that you can refinance a little bit further down the road when interest rates come down. There are even ways to structure a contract between a buyer and a seller that will help you take a lower monthly payment for a little bit, even though the interest rates are a little bit higher, and then you can refinance in the long term. That takes a really good realtor, like Cindy, to do for you. So rates have started to decline from their mid 6% range, which is really high considering the last 20 years of data that we have that show that that number is way above what we've seen really in the last 10 years. And that means that you're going to see a veritable flood of junk mail hitting your inbox over the next couple of months because people want you to refinance right now because they can make money off of you. Now, just because they can make money off of you doesn't mean it's a bad deal for you. I mean, after all, they do have to eat just like everybody else. The short answer is, though, it's a really great time for some people to buy or refinance. For others, not so much. Interest rates have taken another dip in the last couple of weeks, meaning cheaper home loans. But if there's an expectation of an even more competitive rate market when we move forward, it's something worth considering. Movement Mortgage's Steve Shutt says that you shouldn't look at a mortgage as a commodity. Basically, the cheapest one isn't going to be the one that actually saves you the most money in the long run. In fact, we're in a mortgage zone right now where you could lower your rate some, but it'd be a wash thanks to things like tacked on fees and taxes, both of which are really high here in the state of Florida. Here's Steve.
There's a good chunk of people in the last half of 2023 that could potentially look at refinancing right now. The concern and what kind of started all this conversation is that just because rates are lower than what you have on your first mortgage, if you are one of those people, doesn't necessarily mean that it makes sense. There's a lot of costs involved. Florida's an expensive closing cost state, and also we expect rates to continue to come down. So it may not make sense to do it now.
Because Florida doesn't have a state income tax, the government has to make its ends meet in some other ways. And nickels and dimes buyers on everything from, gasoline purchases to business licenses to, even home purchases. This allows the state to make up revenue shortfalls that otherwise would be there because they don't have an income tax to rely on. Those fees can end up costing tens of thousands of dollars, which of course are tacked onto the loan and effectively leave you with the same or similar mortgage payment that you had to start with. But you're out a lot of cash on hand. We all know that cash on hand is better than two cashes on hand in the bush. That's a thing, right? Anyway, you got to remember also that Niceville is kind of basically glorified off-base housing. You might be looking to buy a house in Niceville because, you got orders here. Or maybe you got a really great civilian job on base or in the tourism industry. Well, the number of people that do that kind of add up. And I'll tell you right now, the chances of finding the perfect home for the right price are looking kind of grim in our area right now. And that's not great for either buyers or sellers.
I have had several buyers who we've been looking for months. And I even had one buyer who used to live here in Shalimar and wanted to move back. And we looked for over a year. And they finally gave up on trying to find something here that they could afford, and they moved somewhere to Alabama. Another young couple who he does have a job here, they were planning to move here. We looked for months, and they gave up and decided to stay where they are, and he's instead going to buy a condo that he can stay in when he has to come here for work. He's managing to work remotely most of the time. But there seems to be this struggle of housing prices in Niceville. And Niceville, the average or median sale price is quite a bit higher than the rest of Florida and nationwide.
So those are the two hurdles that you're going to have to figure out as you try to buy a house or help somebody buy a house by selling yours here in the Niceville area. Basically, the increased price tag on those homes and the mortgage rate that goes with it. So even though somebody could have maybe just a couple of years ago bought a home in this area, they've been priced out by the increase of those, two things. And to kind of illustrate that point to you, I want to talk to you about your new friends and mine, Roberta and Johnny. So Roberta and Johnny, say hi, need to move back to the area. Roberta is in the military, so they sold their home in Niceville 5 years ago when she got orders to leave for about $400,000. Their monthly payment on a $320,000 loan in 2019, because they put 20% down, was $1,366 on a 3.1% interest rate. Now this is where things get interesting. Johnny sees the exact same house that they lived in 5 years ago, and it's on the market, which is super. Not really, actually. You see, the median home sale price has increased 55% in the last 5 years alone in Niceville. And sure, some of that is just new construction being built, but most of its home value increased. So long story short, that home is now worth about $620,000. And if they still put 20% down on the home, that's $124,000 or $44,000 more than they did last time, they have to take out a $496,000 loan on the home, which is more, of course, than the total value of the home when they sold it. Now, with a 6% interest rate on the loan, they're looking at roughly a $3,000 monthly payment on a home that they owned and paid $1,366 on 5 years before. And that's before property taxes and insurance, which are also going to be higher because, hey, they're a percentage of the home's value. Before you think to yourself, well, that sucks for Roberta and Johnny, but that's great for the sellers, you got to remember that they can only sell a home for that price if they can find a buyer. And with housing becoming more expensive, that means fewer people can actually afford to buy that house. So let's take a look back at Roberta and Johnny's finances. Roberta is an '04 Air Force pilot. Congratulations on making major, by the way, Roberta. Johnny teaches 7th graders. God bless you, Johnny. Together, after flight incentive pay, base housing allowance for Eglin, and the base salary for teachers in Okaloosa County, and then subtracting their taxes, they bring in about $150,000, or about $12,500 per month. According to Time Magazine, you shouldn't spend more than 28% of your gross income on housing, and according to these calculations, Roberta and Johnny will have to spend 24% of their monthly income on the same house they lived in 5 years ago. So when you compare it to the situation they had 5 years ago, Roberta was a captain, and they brought in about $800 less per month. Their $1,366 mortgage was just 11% of their monthly income, which is a lot less compared to that 24% we just talked about a minute ago. All this math to say, even as these people are getting promotions, they're barely going to be able to afford the same house in Niceville. And that means that people with homes that have appreciated during this 5-year period are basically stuck in these houses because people who want to move in simply have a much harder time getting enough money together to make payments. And since a good portion of the people moving into and out of the area on a regular basis are active duty and therefore have similar budgets, this effectively removes homes from the inventory. So there are 2 people that really benefit from the real estate situation that we have here in Niceville right now, and that's cash buyers and people that are doing mortgage assumptions. First things first, let's talk about the cash buyers. These people are typically your people that retired as a lieutenant colonel, so they have that pension. They also probably have a little bit of disability money coming to them, and they have a pretty good civil service or contracting job on base.
Cash buyers are kind of immune to a lot of the expenses that financing buyers would experience. Obviously, the cost of financing, so interest rates are off the table. You don't necessarily have to carry homeowners insurance if you don't want to. Certainly not for like wind, storm, or whatnot. You can get a much lower expense insurance policy, and so really then you're just looking at property taxes. And so these buyers are coming from out of state. You and I have equity in our home, and so if we sold and decided to move, we could sell our homes here and go pay cash for a home someplace else, or put a lot of money down on a home someplace else. So Niceville's expensive, but it's not the most expensive place in the world. Imagine somebody who purchased a home just right down the road on 30A area, Grayton Beach, and they flooded here during COVID because they wanted to get away and they were able to buy a home. Maybe they bought a home for $1.5 million, right? Sounds like a ton of money to us, but somebody who is from Chicago, that's kind of normal, right? So they buy a home here for 1.5, that's now worth 2.5, and they say, they sell that home and they come over to Niceville and they pay $1 million for a home in Deer Moss Creek, or a new construction built by Randy Wise, or any of our wonderful builders that we have here locally. And so that's just reality. And so what that does is it continues to take up inventory and keep prices stable.
The other group of people are the people that are able to find mortgages to assume. So you can get an assumable mortgage even through a VA loan or a USDA loan. All those things work together, and if you can assume it, you have to qualify for it. You're in a great place because now you have a low mortgage interest rate, and the person selling it to you is able to take that money and put it somewhere else. Finally, if you're holding out for a sub 3% interest rate on a mortgage, I got bad news for you. It ain't gonna happen. See, it was the perfect storm that brought about that in the first place.
The rates were historically low, right? And that's what's in everybody's most recent memory. The last 10 to 15 years, really, rates have been very, very low, historically speaking. And so if we see rates that low, a lot of times it means it's because of some type of financial collapse, right? And so the markets are trying to, the economy is trying to be stimulated artificially, potentially, or whatnot to get things moving. And those low interest rates were great for a lot of people, but it drove up the cost.
So I did a little research and I found out that of the last 50 years, there were only 2 years that had an average 30-year fixed mortgage rate below 4% before this whole dip and then back up that the pandemic did, and that was 2012 and 2013. To recap, the local real estate market has gotten a little bit weird. It's got some weird quirks in it, and these are the 6 things that you need to know if you're planning on buying or refinancing a home in Niceville right now. And of course, right now is the summer of 2024. Of course, we'll update this. It is kind of sort of a seller's market. But clever buyers have some advantages right now. Decision fatigue among movers to the area means that the homes that are not updated and ready to sell are going to sit for a lot longer than those that are just ready to go. Fixer-uppers are having a real bad time in this market. Refinancing might be worth it right now, might not be. It just depends on your situation, and not just your current mortgage, but other debt and your life situation too. The housing market saw a price explosion over the last 5 years, which means many people are finding out that they can no longer afford to live here, even if they have what would be considered a good job. Housing costs are simply too high. Cash buyers and mortgage assumers have a hand up in this market, but there aren't too many of them running around. The days of sub 3% interest on a mortgage, they're long gone, and they ain't coming back. You want more info, or you want to talk to Steve or Cindy more at length? MidbayNews.com. We have all of their information right there.